Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has continued to balance within a range, and our short-term bias heading into the open is neutral. We know that the market has been balancing in a range even over the last couple of days, and for that reason, we have to be quite nimble with our intraday bias. A lot of volume has accumulated at 53.5 and 56.25. Quite often, these high volume areas can serve as launching points of short-term directional movement. So heading into the open, even though our short-term bias is neutral, we're going to keep an eye out for real-time signals indicating directionality. So for example, if we are getting fluid price movement in one direction, accompanied by sustained momentum in that direction, and the other markets are also participating in that movement, then we know that there's potential for some continued directionality. Now, in order to get an upside directional move, we would have to break out beyond the 59 to 61.25 initial resistance, and in order to break out above that area, we would have to see some decent momentum, broad market strength, and the other markets participating in the move. A break above 59.61.25 could quite easily lead to a move into 65.25 to 67.25, and that's a zone where we'll have to assess the situation in real time, see kind of what the range has been on the day, whether the market is exhausted into it, because if the market is going directional and it's breaking out beyond the recent 2-day balance, then we may have to go higher towards the 71.5 naked VPOC or even 73 to 75 zone to attract responsive sellers. On the downside, a break below 49.75 to 50.75 would be the first signal that the sell side is becoming more dominant, and that would bring the 45 to 47 initial support into play, which marks a low from Friday, and a break below 45 to 47 could lead to a test of 36.75 to 39.25, which is still a spot where responsive buyers can be active, especially if the market is exhausted into it. So on the downside, we'll still have to exercise some caution at pre-market support and initial support, and again determine whether the market is still in a very balanced two-sided environment or if we're seeing signs of directionality to the downside, because remember that 53.5 and 56.25 high volume area can serve as a launching point. So if we are launching off of that area on some decent downside momentum and it's fluid movement and the other markets are breaking down as well, then we'll have to be careful fading pre-market support and initial support. 36.75 to 39.25 is a stronger area of support. It marks the low from the last week and the last couple of days, and if the market is exhausted into it, that's still a spot where responsive buyers can defend and we could get a decent bounce. So those are the main ideas heading into the open. Again, short-term bias is neutral, open to a move in either direction, but we just have to be quite nimble with our intraday or real-time bias depending on how the situation develops in real time. So off the open, let's see how the market responds to the previous VPOC and close, the 53.5 HVN, the 56.25 HVN, and then on the upside, 59.61.25 is really the significant inflection point, and we'll take it from there.